Hey everyone, welcome back to Corporate Decoder. We're about to peel back the layers of a company's recent filings and see what secrets they're hiding, or perhaps not hiding so well. Get ready for a look at SHARPS Technology Incorporated's latest report. It is not just about numbers, it is about the story they tell. And we've got a special announcement for our channel right at the top. If you enjoy getting straight, no-nonsense insights into corporate filings, make sure you are subscribed. Also, we've got a vibrant community over on Discord. Link is in the description below. Come join the conversation. Alright, let's dive into what SHARPS Technology Incorporated has just filed with the US Securities and Exchange Commission. This report gives us a snapshot of some important business dealings. The company is SHARPS Technology Incorporated and it is based in Nevada. They're filing a Form 8. Which is like a quick update on a significant event. We see here that their common stock is traded on the Nasdaq Capital Market under the ticker symbol STSS, and their common stock purchase warrants are also there under STSSW. It is always good to know where the company's shares are available to trade. Now, what is interesting is that SHARPS Technology Incorporated is identifying itself as an emerging growth company. This means they get to follow some slightly different rules that are designed to help newer companies grow without being bogged down by some of the heavier reporting requirements. They've also elected not to use the extended transition period for accounting standards, which generally means they're trying to keep up with the latest accounting rules as they come out. The main event here, and this is where things get interesting, is the announcement of a lockup agreement. On the 15th of January 2026, the company entered into this agreement with an entity called Sol Markets. Think of Sol Markets as a strategic advisor. This lockup agreement is for a period of 90 days from the date of the agreement. What does that mean? It means that Sol Markets has promised not to sell, or in simple terms, to hold on to any shares of SHARPS Technology Incorporated's common stock that they own or could get their hands on. This is usually done to prevent a large sell-off of shares that could potentially drive down the stock price, especially around a significant event for the company. It shows a commitment from Sol Markets to support the company for at least this short period. The actual lockup agreement itself is filed as an Exhibit 10.1. We don't need to get into the nitty-gritty legal details of it, but the key takeaway is this restriction on selling shares for a set time. Following up on this, on the 16th of January 2026, the company issued a press release. This press release announced that they had entered into that lockup agreement with Sol Markets, among other things. Companies often put out press releases to make sure investors and the public are aware of important news. This press release is also included with the filing as Exhibit 99.1. It is important to note that the information in this part of the filing, the press release, is not considered officially filed in the same way as the main report. This means it is more for informational purposes rather than being subject to the same strict legal liabilities. Finally, this section lists all the documents that are attached to this report. We see Exhibit 10.1, the lockup agreement, and Exhibit 99.1, the press release. There is also Exhibit 104, which is the cover page interactive data file, basically a digital file for easier data processing. Now, what is the story here? We're not seeing big financial results in this particular filing. This is primarily about a strategic agreement, a lockup. What does this lockup with Sol Markets imply? It signals that Sol Markets, a key player here, is committed to the company's stability for the next 3 months. This could be a positive sign, suggesting confidence in the company's future prospects, or it could simply be a standard practice for strategic partners. Without seeing the company's actual financial performance in this specific report, it is hard to say how strong SHARPS Technology Incorporated is from a numbers perspective right now. This filing focuses more on a contractual understanding that aims to support the stock's stability. Looking at the broader context, lockup agreements are often seen when companies are going through significant changes like mergers, acquisitions, or large funding rounds. In this case, it is a strategic advisor. The fact that they are an emerging growth company also means they might be in a growth phase, where managing investor expectations and market confidence is crucial. The stability provided by this lockup could be seen as a way to build that confidence. So, my take on this: SHARPS Technology Incorporated is focused on building stability and confidence with this lockup agreement. It is not a traditional financial report, so we can't analyze revenue or profit from this specific document. The main risk or opportunity here is what happens after this 90-day period. Will Sol Markets continue to hold its shares, or will it begin to sell? That will depend on the company's performance and market conditions. For now, it is a move to prevent short-term stock price volatility. Alright, that is our quick decode of this SHARPS Technology Incorporated filing. What are your thoughts on this lockup agreement and what it might mean for the company's future? Let us know in the comments below. If you found this analysis helpful, please give this video a thumbs up, it really helps us out, and subscribe for more deep dives into corporate documents. And don't forget to join our growing community on Discord, the link is in the description. Thanks for watching, and we'll see you in the next one.